What's up? How you guys doing? So, because I care so much about you guys and I want you to be in your bags in 2022,
yes,
I am doing the hard work for you now. I'm bringing someone here to help, actually all of us, because I need help too. So today I am going to be chatting with one of my very good friends and we'll talk about money. If this is your first time on my channel, take a seat, get comfortable. Okay, so let's start off by introducing you to the audience.
My background has been in finance. I've been working in the industry for roughly 5 years. It was an eye-opener to me in terms of like starting like savings and investments. For me, I've kind of been good with money just based on like the family background I came from. Like savings has always been something that is important to us, but I didn't know the different like investment tools on how to save. Exactly, okay. Because it's very easy to just put money in your savings accounts, but it's not really accounting for inflation. Inflation is roughly 2%, and banks give roughly 0.5%. So I'm in Canada, right? But it's similar in the States. Like the savings rates are not, exactly.
It's not high. And it's even gotten worse since the pandemic.
Exactly, because they reduced interest rates. The federal government reduced interest rates to stimulate the economy.
Right.
So so for me, I work as a trade compliance analyst in the investments and finance industry. So it's been an amazing experience so far.
Nice.
I would say it's not for the faint-hearted because it's a male-dominated industry. But you get your thick skin and you go with it.
I told y'all that I'm going to be showcasing some black women excellence on my channel, and this is another one doing it big now. You've spent about 5 years in the finance industry. Looking back at like maybe your 21-year-old self, what would you tell her?
It's I would say you're doing a great job and you're on track to doing big things. I did make some mistakes, during this whole journey. So it's not been one that's been like smooth sailing. There's been lots of ups and downs. But I think learning from your mistakes. So for me, as I told you, different investment tools. I started with mutual funds. So mutual funds are pretty much a pool of funds that are invested in different firms. And then usually the annual return averages between like 5 to 7 or even 20-something%, depending on the risk tolerance and the time horizon of
and that's like much better than your typical
savings account. But it could also go down. It could go lower than your principal. So it's not guaranteed.
Because it's like every investment.
Exactly. There are some that are guaranteed. We have the GIC, the Guaranteed Investment Certificates.
So in the US, we call that the certificate deposit, CDs. She lives in Canada, so just trying to get
different terminologies. Exactly. So those ones, the principal is guaranteed, but your interest is substantially lower. So I'll say it's for more risk-adverse clients. Either older clients or people that may not be as knowledgeable and they don't want to risk it all, which is fine. Like I think you should know yourself as a client and know what works best for you. Like if your time horizon is short, don't go into something that is risky because you don't want a situation where the market dips and you're literally in trouble.
Don't have the money.
So so I'll tell my 21-year-old self that just be careful. Don't do your research, do your personal research, because there are a lot of speculators in the market. So people that feel they know it all, and listening to them, I think it can be risky, because just know like you're working for your money and your money has to work for you, but don't lose it all. So I'll tell you an example of why I'm saying this. I don't know if you've heard of the REITs stocks. So it was such a big hype and it was doing well for some time. But I think it was a bubble. It was a bubble, and it did bust. And I got caught up in that
as well.
Because I think it's for people that either wanted to get into the market and sell it quick. But for me, I wasn't. My mind was not there. Like that's the thing about it again. Like I think it's very important to maybe if you think it's not a secure firm that you're investing in, or it's not like a bank or something long-standing,
right.
That has like a strong reputation. Watch it and monitor it well. You don't want to be also panicking and looking at your stuff every time. You don't want to give yourself a heart attack. But I would say like monitor it, especially if you need the funds, because I invested in weed stocks and I lost like 10K.
Oh my god!
I know. So I got into the bubble and I got hurt. But I learned from that. So doing your research, knowing what works best for you, I'm going with that.
That's awesome. I feel like one of the scariest things of adulting is figuring out where to even begin. You know, like the saving is great, but now in retrospect for me, I'm realizing that your money just sitting in the savings account, like you said, it's not working for you. It's not even growing as fast as inflation. So half the time, what you have right now is less. True. You know, you have less buying power like years to come. So I'm just curious to know, like, you know, what if you're trying to help someone, you know, with their finances, do you have any? I know for me, I needed to, like, you know, do, like you said, do your research, try to understand how do you even make a plan? Like, how do you make a financial plan? So I guess just from your perspective, you know, we've been in the finance industry. What advice would you give?
First of all, I'll say diversify. So don't put your eggs in one basket. And I would say people, when they hear investments, they think, oh, it has to be a large sum of money. No. I started with something small. Like when I first started working in the finance industry, I started from like the bottom. Like I started as a customer service rep, which is pretty much a teller at the bank. But that's where my ears were on the ground, like trying to pick everything up. So I was working for one of the big 5 banks in Canada. But I started with my salary that was not even, but I started with like maybe every 2 weeks, when time I get my paycheck, starting with $50. So there's something called a pre-authorized debit, like a PAC, pre-authorized contribution, that comes in automatically, and you just go to the bank, you tell them to set it up, and they can align it to a particular date. So weekly, bi-weekly, monthly, whatever is comfortable for you. So
consistently
exactly. And you can start small. So most mutual funds, because I would like mutual funds are kind of my thing, because I think they're kind of stable enough, but they'll still give you the returns. I think it's the middle ground, because GICs, they're lower risk, they're like
the
zero risk.
The risk, the potential higher return, but also you could lose all your money.
And then stocks are on the other, so blue chip stocks and all, they can be on the other end, like super risky, but like potentials for higher returns. So I started small, like, and you build on that, like something, you start small, like 100, if you say, oh, $100 every 2 weeks, think of it, $100 is like a night out, so you can do it. Exactly. So if you're doing $100 bi-weekly times 26, that's already $2,600 that you're going to get in a year, and times it by a 5% return, and it's going to just exponentially grow like over that time. So it's not simple interest, like it's going to grow, like, so I'll say, like, start with something and start today. Like, starting today is better than starting in 5 years. I don't think it's too early or too late to start. So, and again, as I said, diversifying. So I have mutual funds. I have something called segregated funds. So that one has like an insurance component to it, or layer to it, where part of it is secure. It has like a guaranteed debt benefit, and it has a guaranteed principle of. So anyway, that one is a bit more complex.
What's the debt benefit?
Death.
Oh, like, death. Oh, okay.
If the person passes, so that's where the insurance component comes in. And something else I wanted to say. So a lot of people don't know, but when you start up with working for a company, a lot of those companies offer stock options or like investment options. Please take it. Like, don't say, oh, this is going to be part of my paycheck that's coming out, because a lot of these employers, they match it. So either 100% of what you're contributing or a particular percentage. Most of the firms I've worked in, they'll say, oh, maybe you can do maximum of 5 to 10% of your income. So if you're earning like 40K,
so you're talking about employee stock purchase plan, right?
Exactly. There's the employee stock purchase plan, exactly. And I don't know what you guys call it in the States, but we have three types of investments. So we have the retirement savings plan, which we call the RSP. We have the tax-free savings plan, which we call the TFSA in Canada. Then we have the non-registered plan.
Okay.
So in Canada, you can put 18% of what you earned in this year.
Gotcha.
So into it, that's your contribution room. And it carries over. Like if you've never used it, for example, if last year you earned 50K, 18% of that, if you didn't contribute into your RSP, it would add on. Right. So the good thing about an RSP, it's tax sheltered. So up until retirement.
Right.
But different countries have different things. I don't know what.
So in the US, she's talking about the 401k. So 401k, a lot of employers would match your 401k.
Correct.
Up until like a percentage, and you have a maximum limit of contribution per year.
Yeah.
I think the last I checked for 2021, it was about $19,000 for the maximum contribution to your 401k.
Okay. Yeah.
And that does not even include your employer contribution, which is great. So you can contribute up to 19,000. So you can kind of have like a percentage. Like for me, I contribute. I try to. My goal is to get to like 20% of my income. So right now I'm probably like around 15%. Just getting that, because it's a really good way to just. It even reduces your taxable income.
Exactly.
So
that's why I use it.
Perfect. Yeah. So you're able to just push that money into your retirement savings account. But yeah, I think I like all of those.
I don't know if it's the same in the States. For us, if you're looking to purchase a house, you can actually borrow up to 30,000 of the money in your RSP, and they won't tax it. It's just that you have to start repaying it back in 2 years. But they'll give you a schedule. But that's awesome, because if you've been saving into that, it's almost like you're borrowing free money.
Yeah.
So that's a good.
I know that in the States where you have some events where you can take out your 401k, so it's probably similar. I'm not sure the exact terms for that, but I know there's like one thing that I would also like to know, and I'm sure a lot of people want to know, is like, what would you say is like the biggest misconception about finances that people have, like with you having both the perspective of from your own personal perspective as well as just having been exposed to the financial industry for a long time. What would you say is the biggest misconception, and how do we kind of avoid that as like trying to grow our finances?
So as I said before, I think a lot of people think you have to have a huge amount of money to start. That's not true.
Right.
You can start with something as little. And another one is people think, it's only like the predominantly like dudes, like women cannot get. My ladies, please get your bag. You just need to do your research. Like, look into like these different things. Walk into a bank. Don't be intimidated. Ask to talk to an advisor. If the service is free, if you're banking there, ask to speak to an advisor. Ask them what options they offer. And I'll say do your research well, so that it's not like their own opinion is pressurizing you, so that you can know a bit more about it. YouTube videos are also there to educate you. There's so many materials. So do your research. You don't have to be a guru, or you don't have to have taken finance to know. No, anyone can start investing. And you might make some mistakes, and it might scare you, but I think you should know yourself personally, know your risk tolerance. That's very important. Know your time horizon, and go from there.
That's awesome. I really like that. So start by planning. Honestly, I personally want to start imbibing this culture into my kids from a really young age. Like, help them to start learning how to invest, even like from like high school or something. Let them understand all of the basics, and just little by little, because it's really little drops of ocean, little drops of water that makes an ocean, right? Because it's like you start little, and it's not a get rich quick scheme. No. Don't go into it.
Please don't.
Don't, trust me, you'll be burned. Don't go into it thinking, oh my gosh, I'm going to get rich overnight. No, it's a long-term commitment to yourself, and you building wealth. I really hope to talk more about some of the things that I have been doing personally. And just a quick plug here, this is not a financial advising YouTube channel or whatever, so we're not liable to anything you do with your money. So disclaimer, we're just saying from our own perspective the things that we've learned, and our personal experiences with finances. So take it with a grain of salt, but just I try to tell people to start somewhere, learn, set aside time, and read up stuff. There's so many, like, we're so lucky to be in the internet age right now.
Correct.
That there's so much information out there, and then you sit down to decide what's best for me right now, and what's the best plan. What's your goal long term? What's your short term goal? Do you have debts currently right now that you need to pay off?
You just addressed an important thing. Please, if you do have debt, it's okay. But I think you should know what interest rates they're charging you. Because if they're charging on a credit card like 7-10%, and you're looking to invest in something that'll give you a return of 5%, you're losing money. So I'll say try to pay off your debt first and focus on that, then invest. You can even be investing some small amount of money, but you don't want it to seem like you're pouring water into a basket. It doesn't really, if you're still going to be losing like 12% on it. So yeah, pay off your debt as much as you can, and then focus on savings to get the best return out of it.
Yeah, that's very helpful. And I think it's also trying to understand, like she said, if it's high interest rates, you want to pay those off really quickly. But there are actually some type of loans that the interest rates are not high, like maybe car loans and stuff. If you get a really good rate, you can balance that out and not necessarily rush to pay those off. You can get investments that would yield even higher interest rates, and in the long run it would make sense. But yeah, you guys, there's more to come, but this is just a snippet of what you're going to be getting from my YouTube channel, so you better subscribe if you haven't.
Please.
Funto, thank you so much for sharing. Is there anything else that you feel like you like to share from your experience building web?
Like I've already said, start somewhere, please. Like, investing today is better than investing in 5 years. So don't say, oh, I've lost this amount of years or whatever. No, it's really paid off for me. It's really paid off for me. And you know how a lot of people have this 10% rule, that 10% of what you earn is what you should at least be saving. I think you need more than that. Like, you need the rain day fund. Your emergency fund. Your emergency fund, that God forbid if something happens and you lose your job or like an emergency life happens, I think you should have at least like 3 months worth of salary saved. And for me, I know it might be a bit too high for people, but I save like 40% of my income.
Wow, that's good.
Yes, because you want to live like well within your means.
It won't be low.
Yeah, if you can. I'm not saying don't deprive yourself of like life's pleasure, because you also want to feel like
enjoy your money.
I want to enjoy my money, and but you want your money to work for you. Yeah. So, and investment does not only mean like investments in terms of like financial investment. Like, investments can also be investing in your education so that it would pay out in the long run. And if you're like us Nigerians and have different side hustles, like if you have, for example, like a spare bedroom or whatever, Airbnb that thing, like bring in different sources of income, because I always tell people try not to just have one source of income. And the good thing, I don't know if you've heard of REITs. So real estate investments, like ETFs,
that's the next thing I actually want to look into.
So exchange traded funds, REITs, they pay dividends. So some firms, their stocks appreciate. Some firms, they pay you dividends. So that's passive income. So your money is literally making money for you. So that's another source of income that you're not even working. So some pay monthly, some pay quarterly, some pay annually. That money is coming in and making money for you.
So let's talk a little bit about those real estate. I've seen it a little bit, but I've not been able to dig deep into it. So is it like mutual funds but for real estate?
They do have the
index funds.
They're index. Most of the ones I know, they're index funds. So similar to whatever platform, direct investment platform you purchase your stocks, they have REITs. So I have a bunch of them that I've purchased, and it's when you do your research, you can research best REITs or best paying dividend, whatever. Like, it would bring out a bunch of it, like trading on the TSX, trading on the New York Stock Exchange. It will bring out a bunch. So again, it's all about doing your research and seeing what people, the good thing is people are so helpful. They would share information. I've never met someone that is hoarding information about investments. It's not like you're not losing by sharing information. That's
awesome. Thank you so much, Funto. So some of the things we talked about, I'll link them in the description box. So check it out. I have some resources, and I'll ask Funto if there are like any specific resources as well that she'll be able to share and feel free to go wild on the Googles.
Yes.
And get all your information. But all right, guys, let me know if you have any questions, and I'll be sure to relay them back to Funto.
Bye, guys.
Bye.